company that's figured out how to profit from the housing market without owning a single house. We are going to break down their latest report to see exactly how they pull it off. So, think about this for a second. Can you really profit from home loans without owning any property? Sounds kind of weird, right? But the answer is a definite yes. Today, we're diving into the latest quarterly report from a company called Orchid Island Capital that does exactly that. And we're going to see what their performance tells us about the wider economy.
Okay, so let's get right into it. To understand a company like Orchid Island Capital, we first need to get a grip on their basic business model. What are they actually buying and selling?
At its heart, Orchid is a special kind of company called a REIT. That's short for Real Estate Investment Trust. The easiest way to think about it is like a mutual fund, but instead of buying a basket of stocks, it lets you invest in a huge portfolio of real estate assets.
Yeah, Orchid focuses on something called residential mortgage-backed securities. I know, it's a mouthful, but the idea is actually pretty simple. They buy up thousands of individual home loans. Yeah, maybe even one like yours. Bundle them all together into a big package, and then they earn income as all those homeowners make their monthly mortgage payments.
All right, so how did this whole strategy of packaging and trading home loans actually work out for them in the third quarter of 2025? Well, let's just say the numbers are pretty eye-opening.
The big headline number from their report is a really strong 6.7% total return. And get this, that's not for a whole year. Nope, that's the return they generated for their investors in just 3 months. And their growth? It's been absolutely explosive. Their net income shot up to over $72 million. That's more than 4 times what it was in the same quarter last year. Just a massive, massive increase.
So what's really interesting here is how they do it. They have a laser-focused approach. Their entire portfolio of mortgage securities is backed by just 2 U.S. government-sponsored enterprises, Fannie Mae and Freddie Mac. And that's a big deal because it helps reduce their overall risk.
Okay, a key piece of their strategy for boosting those returns is using something called leverage. In simple terms, it's investing with borrowed money to try and amplify your results. It's definitely a high-risk, high-reward approach that can supercharge your profits, but it can also supercharge your losses.
And Orchid, well, they use a lot of it. Their leverage ratio is 7.4 to 1. So what does that actually mean? Well, for every $1 of their own money, they've borrowed another $7.40 to invest. This is how they crank up those returns, but you have to remember, it also means any losses get magnified by that same exact amount.
So, with such high leverage and these really impressive returns, you'd think the company would be shouting from the rooftops, right? Just pure optimism. But this is where things get really interesting. The CEO's own commentary throws in a surprising bit of caution. You see, despite having this incredibly strong quarter, the CEO, Robert E. Cauley, describes the current economic environment as being at a crossroads. Now that suggests a deep uncertainty about what's coming next, even from the leader of a company that is, by all measures, doing extremely well right now.
So what exactly does he mean by a crossroads? In his comments, he lays out this fascinating picture of an economy that's being pulled in 2 totally different directions at the very same time.
He points to these major conflicting signals. On one side, you've got these serious headwinds creating risk. We're talking about things like tariffs, trade uncertainty, and a labor market that's starting to cool off. But on the other side, you have these powerful tailwinds showing just how resilient things are, like stable consumer spending and the potential boost from deregulation and AI. It's a real economic tug-of-war. So, this is the crucial part. What should you take away from all of this? Why does one company's quarterly report actually matter to the bigger picture? Well, looking at this one company's report actually gives us 4 key insights. First, it shows that these specialized investments can deliver some seriously high returns. Second, a company like this acts as a sort of barometer for the health of the housing market. But, and this is the most important part, it reveals that even highly successful companies are seeing major uncertainty on the horizon. Our whole economy seems to be caught in this battle between these powerful forces of weakness and resilience. And that leaves us with a final thought to chew on. In this really uncertain environment, this economic crossroads that the CEO described, which of these forces do you think is going to win out? What's going to define where the economy is headed next?